Before I'm going to start trading, I want to make sure I understand the bias of the market precisely, and I can gather all the information just from the pure candlesticks from the price action on the chart. I can see that this is the pre-market structure and the prices are trending to the upside. We haven't even managed to break below EMA once. The 21 bar supportive indicator is pointing up. We have a 2 legs to new extreme. Trend line rule played out. Now I expect correction, and notice the market moves in pairs of twos and another 2-legged pullback down. So what is my bias overall in this instance? I'm still thinking bullish. Why? Because this was a very strong overnight session, not a single confirmation of the EMA, and we started straight into a bullish trend. So this is a bullish bias, and I'm no longer expecting for prices to continue working lower. And prices are confirming my analysis, so I'm looking for failed second entry short. Because market moves in pairs of twos, so 2-legged pullback to sell with trap sellers on the opposite side of the EMA. But prices are failing to pull back and they are trending to the upside. So I have to only just sit here and watch. And also notice we keep pushing higher. Okay, so at this point we have a break new high, small correction, and the main bullish bias resumed. Given the fact that we keep trending higher to the upside, I can look for potentially wide channel. Let's say something like this. I'm just going to copy the trend line, put it at the top. It fits decently, not that perfect, but I cannot deny how bullish the market is. So prices are correcting, which means I need to withdraw the shortened channel because there are small trends, even part of the bigger trends. This is the highest high where I would reset the count where I'm cutting for long. So we have a first entry long, pullback, we have a second entry long, but the second entry long triggered above this doji bar, which means I cannot take it. And also I can see that the prices are starting to go sideways a little bit. So this is forming a congestion because EMA is getting exactly in the middle of these bars. We have 6 bars stacked right next to each other, and I'm not taking any setup. You can see you still would have survived if you enter long, not that you won't, but your stop loss goes one tick below the single bar. And at this point, you can't really enter because you can see EMA exactly in the middle of these bars, pure congestion. However, I'm not thinking about selling. The downtrend played out with the break close outside new extreme. EMA keeps holding prices. This is a sign of bullish momentum, and we still expect for prices to continue working higher. Can I go long? I cannot. Why? Because this right here is a small congestion, basically a trend range. And most breakouts of trend ranges will fail. So I would be buying the breakout here. This is not really a breakout pullback. You're just breaking out. So I would be only interested in buying if we get some pullback. You can see pullback is happening. And now we may have potentially new low, first entry short, second entry short failure. It didn't trigger. Now, had there been a trigger, is this okay setup to take? Yes, more aggressive. I would not pull the trigger here given how sideways this is and how early it still is, because there's still plenty of time in the day. But this is a failed second entry short. Of course, there's no trigger, so no failed second entry short. That came a little bit later once it triggered above this bearish bar, which means you cannot really go long here. And market continues trending to the upside. Massive bear rejection. Okay, back into the congestion. Bull bar. I'm looking for any decent 2-legged pullback, and prices already created a new extreme for this uptrend on the left. Another bear rejection, EMA flattening a lot, which means consolidation is being formed. Is there any high probability setup? Not really. Just gonna zoom back. You can see EMA flat, we're just going sideways. Micro double top, resist the count. EMA still exactly in the middle of these bars. So we can see a bullish trend after breaking new extreme transform into brand new market cycle. According to rules, breaking new high, we are entering correction phase, and prices are trending back to the downside. As you can see, consolidation, flat EMA. When I was watching this live, I was still leaning more bullish, and after I saw prices creating a break and a new low for the downtrend, this is where I was expecting a failed second entry short above EMA. But since the prices are so sideways and this is a clear consolidation and uptrend played out, you gotta be careful. You definitely cannot buy below EMA. We're not even at the support. We have 2 legs to a new extreme. Okay, and this is going to be important. If the EMA is going to hold, the bullish bias will resume. If we're going to break below, the bearish bias will start. And prices are trending to the downside. Okay, and we keep pushing lower, and we keep creating so many new lower lows. So the initial downtrend had a break, 2 legs to a new extreme. Bulls attempted to break the EMA and failed strongly again. So at this point, there are no bulls. The bearish bias is getting stronger, and I can start looking for possible bigger downtrend. I'm going to connect the first 2 swings, copy it. You can see how nicely it fits off the bottom. And I have a new low, first entry short, pull back, second entry short, because I'm counting for shorts off of this latest low. I'm looking for break below the bar. This is the first break below, first entry short, failed. And this is a second entry short of 2 key entry points, great bearish bar. And we have second entry short of 2 key entry points. Now, unfortunately, I didn't take it because I was looking for prices to continue working higher. I was looking for possible spike in a channel. I drew a little bit wider. I should have used the tight moment to break new high. So I missed the setup. But since we have a break new high and a congestion, since the first 2 swings was up the trend line and now it's getting confirmed even on this doji, you have 2 key entry points. You have a small break and new extreme of this tiny correction. So you can see there are micro corrections even inside of the bigger patterns. And 2 key entry points is a sign that sellers are selling and the market is reversing and prices are trending to the downside. Okay, so at this point, the structure is clearly a bearish downtrend. So I'm looking for high probability setups to sell at the key entry point. This is where the correction phase will end. I don't want to keep selling at the bottom. I don't know where exactly the prices are going to snap back and stop me out. I want to sell high where the correction phase will end. So I'm looking for second entry short. We have a new low. We have only first entry short. Can we get a second entry short? And we don't have second entry short. So I just have to watch the market go. Okay, we have a new low. I'm going to redraw the uptrend. Similar situation right here. Notice it looks very similar to this. So I'm anticipating possible second entry short. We have a new low, first entry short, pull back, and a second entry short trigger below this bar. Can I take it? No. Look at the signal bar. More bullish bar, doji-ish. You're at the 2 key entry points, yes, but I want to sell below bearish bar like this. Confirmation of the bearish momentum. This is a 2-legged pullback of 2 key entry points. But unfortunately, the bar is just too bullish. Work for a scalp, but you cannot get too wrapped up in this. You have to follow the rules. Okay. And notice we have a visual 2-legged pullback. First leg up. This is going to copy it. Second leg up. The small resistance is holding. The EMA rejected prices strongly. And we expect, according to rules, to create new extreme, new low for the downtrend. So since we have visual 2 legs, EMA is not letting the bulls push through. The downtrend needs to get new extreme. This is a decent bearish bar. I'm going to mark it more aggressive. But you could have considered taking the visual 2-legged pullback because it's such a great bearish bar. It is a strong momentum. I can actually mark it even like this, because it looked like the price is going to break higher and snap back right once it was closing on its very low. Visual 2-legged pullback, you need to get new extreme, and market created new extreme. So according to trendline rule, a brand new cycle may start. Break new high, consolidation, straight reversal, break new low. We expect consolidation, but prices are reversing. Now we have a high low. Can I go long on a high low? I cannot. I would need reversal pattern. I would need a failed second entry short. I can redraw the uptrend. First entry short, second entry short failure, but I cannot go long above this bearish bar. I'm buying, so I want to buy above bullish bar. And by the time I get bullish bar, it's too close to these highs. It's too late basically. So I need to wait. And notice, here we have micro double top, which means I need to reset the count. And we have visual 2-legged pullback. Big tier 1 signal bar. This is the first leg. Market likes to move in pairs of 2. So you can see on the way down, we're counting for 2-legged pullbacks to sell. And now we have 2-legged pullbacks to correct. Now, this is definitely similar to this setup, more advanced and more aggressive. because technically the micro double top resets the count. But since the uptrend didn't create new high and EMA held here strongly and you have a breaking low, so you're not expecting really for prices to continue working lower. And if you combine it with the fact that you traded strongly up, so the overwhelming bias is bullish, especially if you go on a higher time frame on 10,000 tick chart. So this was the smaller pattern compared to the overall structure. You're leaning more bullish. Go on 10,000 tick chart, use it for higher time frame analysis. So because we have the two-legged pullback, I can definitely see going long here. I'm gonna mark it as a second entry long. Once again, definitely more aggressive. I didn't take it myself, but it is a clear two-legged pullback, tier 1 signal bar, uptrend is new high, downtrend played out, so we're only thinking bullish. And since those two legs are so nice and visible, very similar here, basically the same logic, prices are trending to the upside. Okay, if we keep trending higher, given the fact how bullish the bias is overall, using the higher time frame analysis, I'm going to use the wider uptrend and I'm expecting new high, first entry long, pullback, second entry long. Because the structure is shifting from downtrend with new low, reversal is happening, EMA keeps pointing up, but we only have a first entry long. I'm going to reset the count and I'm counting again for two-legged pullback. Okay, we have a first entry long. Can we get a second entry long? And we cannot. By the time we get a second entry long, it's far from EMA. I can't go long here, too far up. Okay, we have a break. We expect for prices to create new extreme. So what we are expecting, a second entry long. New high, first entry long. There can be a break and attempt by the sellers to create new extreme. So I definitely don't want to buy once the downtrend is in play, but there was no pullback and market created already new extreme. So unfortunately, no real way for me to enter. We have a new high, so I expect correction. At least. I cannot go long at these highs, not that there's any setup. I'm going to redraw the downtrend. Am I looking for reversal? Not really. And why? Because the overwhelming daily bias was bullish. This was a very strong trend up, and if you go to a higher time frame 10,000 tick chart, we can see that the structure is very bullish overall. It doesn't look like that because we had quite a decent downtrend. I would still need to see a proven downtrend for me to think bearish. We can see that the structure overall is bullish given the daily bias. And just like here, I don't want to predict reversal too early since the uptrend is so strong. I would need to see proven downtrend before I'm going to start looking for second entry shorts to sell. So I would need to see first proven downtrend so I can start looking for second entry short to sell. At this point, it's going to follow the price action. We have break new extreme. Okay, and prices are breaking back above EMA. So we can see that we have two legs down, first leg down, second leg down, breaking new extreme of the downtrend and push above EMA is confirming the bullish bias. And I'm looking for confirmation setup high low that would confirm the second entry long. Can we get the high low? We cannot, and market just keeps trending to the upside. So unfortunately, I cannot take it. Okay, market keeps correcting, so I'm going to redraw the downtrend. Break a new extreme. I cannot sell regardless because we are so far from EMA. This is just a period in price action where no setup that I can take. And prices are breaking back above EMA. So once again, I'm going to zoom back, confirm the overall daily bullish bias. The downtrend already has a breaking low and push above EMA is indicating to me that there is no wider pattern. The structure is bullish and we're going to most likely continue working higher. We have a new high, first entry long, second entry long, but the single bar is bearish. Double bar entry. Stop loss has to go one tick below the signal bar. So this is too big. I would like to see some high low or failed second entry short. Can we get it? And the market just keeps trending to the upside. And notice the momentum is starting to pick up strong. Okay. Okay, and this is a very strong momentum. I can see that at the bottom, I have first two swings that allow me to set up the trend line. And notice the trend line is getting confirmed with third swing confirmation and a massive bull rejection. So three swings are going to confirm the trend line. It's going to copy it, put it at the top. I'm going to redraw the downtrend because I want to see break a new low or at least attempt for a new extreme. and notice another confirmation and a second entry long new high, first entry long, second entry long. The EMA is quite flat in the middle of these bars, and we can have a little pullback. If you went long here, it still didn't trigger. You can see there's no break above this bullish bar, so you have to cancel your order. Unfortunately, you need to wait because there should have been break above this bar right here. And notice what happened shortly after. A failed second entry short. I'm counting for longs off the highs, first entry long, second entry long, but this was the pullback to the key entry point where I can reset the count, significant touch of the key entry point. So counting from lows, I can count for first entry short, second entry short failure because I'm counting for trap. And notice the signal bar, big bullish stem at the bottom, decent bullish body closing above the EMA. And now since you have a trap, that's the ultimate sign that the bears got trapped. And this is decent high probability setup, failed second entry short. Of key entry point of the EMA, the key entry point came into play a little bit earlier. Bears are failing to break lower, combined with the overwhelming daily bullish bias where each new major low is higher than the previous one. You can see each new major low and high for the most part still is higher than the previous one. So we were not even thinking about selling on a day like this. When I was watching this live, I had a much different signal bar. I had straight doji, exactly nobody in the middle of the bar, stims at both sides, so I could not have entered. If you have doji like that, it's too sketchy. But now I can see that my bars are a little bit better. So if it looks more bullish like this, you can consider taking. And you could have had a massive runner. Okay, we have overshoot. Small one, but it's there. So I can expect break of a channel and stronger bearish momentum because overshoot can generate strong momentum. Micro double top resets the count. I'm going to redraw the downtrend because I also have overshoot. So I definitely need to respect the bearish momentum. Okay, we're breaking higher, but I cannot go long since the downtrend is in play. Overshoot can be a little bit stronger. I would need to see at least high low above EMA to confirm that the overshoot is dissipating. And there is no high low nor failed second entry short, and prices are breaking to the upside. Okay, I'm gonna redraw the downtrend. First entry short, pull back, second entry short, but it's a little bit sideways. And we have a second entry long, new high, first entry long, pull back, second entry long. You can consider possibly going long here because prices are failing to break the EMA so many times. New high, first entry long, second entry long, continuation of the failed second entry short. It's a great sign, but it's already too late at this point. Quite a slow day today, only a handful of setups, but very few traps on the other hand as well. So you can't really go wrong here, but you can't really capitalize on the structure as you would hope. So one of those days where you just have to sit here and pretty much take one trade or two trades if you're lucky. I didn't take any trade today. This one unfortunately missed. I wasn't focusing on the bearish move and not that many setups. I had a horrible doji bar here, but overall price action fairly clear. It just slowly but surely chopping, and the key entry point got nicely confirmed. So I hope you had a decent trading day, and I'm going to talk to you next time. Take care, everybody.